So let's start with our opening presenter. Our opening presenter is Luka Milinkovic, who is IT auditor at NLB Bank. So Luka has many years of experience in controlling and managing of IT security risk through the development of new solutions and performing IT audit. So he's going to speak on, does blockchain technology have the potential to transform the banking industry? So let's welcome Luka. He's already here with us. Hi, Luka. How are you?
Hi, Serena. Thank you.
Uh,
So, good morning.
Good morning. So, Luka, thank you so much for joining us. It's really an honor for us to have you as a part of our conference. So, I have already introduced you, so you can start your presentation now after sharing your screen.
Yes, of course.
Thank you.
Uh, I can't share only presentation. I need to share all screen.
First, you need to click on the share screen button, and then you just need to go on your presentation. Yeah, I can see it now.
Okay.
Yeah, it's perfectly all right. Good luck, Lucas. Stage is all yours now.
Thank you. Hello, everyone. My name is Luka Milinkovic, and I'm IT and security auditor at NLB Bank from Belgrade. Um for me, blockchain is very interesting because it's based on cryptography and some security algorithms which used in my career. And today we'll talk about the potential of blockchain technology. We talk a little about that, what is blockchain technology, but our focus will be on potential of this technology and some use cases in financial institutions. Um, okay. For first, I want to just to explain one more what is a blockchain and what is cryptocurrency, because many people think that it's the same things, but blockchain is not a cryptocurrency. Blockchain is a technology, and this technology uh, is like some people call it like a call it a platform, because we use blockchain technology to create some new services, some new protocols, and some solutions. And one of these solutions, and maybe the the famous solution, is cryptocurrency, because we can use blockchain technology to create coins, digital coins with some value, and with these coins we can pay, we can earn these coins, we can trade this coin. Sometimes maybe we can earn money, sometimes we can lose in the trading, but we can use these coins like real money. And it's just one of the use cases of blockchain. But on the other hand, we have a lot of different use cases in many industry, in automobile industry, in health industry, in financial industry, in uh, uh, playing industry, in gaming industry. Yes, of course, too, and many others. Um, yes, because it's unfortunate that the blockchain technology is still a synonym for cryptocurrency, and therefore the rise and fall of cryptocurrencies market still dictate the level of attention of the blockchain technology gets. Uh, so that I believe that blockchain technology is yet to realize its true potential. Mm. Here you can see some uh, blockchain technologies, but you can see a hype cycle for blockchain by Gartner. Uh, Hype cycle, Gartner have a lot of this hype cycle for blockchain blockchain for artificial intelligence, machine learning, data analytics, and many other security or some other technologies. Sorry. In the here you can see 5 phases in this graph. 5 phases of hype cycle. First is innovative trigger, where we find some discover some new technology and think, oh, it's a great technology. It's different than all of earlier technology which we have. We can use it to improve maybe businesses, security, or maybe some other IT infrastructure, maybe, or some others known and traditional technology. And in the second phase, we have a peak of inflated expectations, where we think that this technology, this watching technology, in this case blockchain, is the best technology in the world. But after this second phase, we have third phase, throat of disillusionment. And then many of these technologies from high go down. And then we think about real use cases, and then we can find real use cases for this technology and their solutions in the fourth phase, in the slope of alignment. And then we use it and really improve some traditional technology, and really improve the business or maybe IT or security, which we want to improve. And then we will come, and then we would come in a plateau of productivity in the fifth phase. Here, Gartner create a hype cycle for blockchain every year at the beginning of the summer in July. Because of that, we have a hype cycle for a year before, for 2021. Here you can see that we have some solutions of blockchain, maybe 1/3 in second and in a third, and in a third and the fourth phase, when we start to think about real use cases and where we can really use it, and how we can improve our business. In a year before, yes, I missed to say that here you can near each solution you can see a little cycle. It's a circle. It's dark blue, light blue, and white. This circle show us when Gartner or experts in Gartner think that this solution would come in fifth phase. If you have a dark blue, it can happen in a period between 5 and 10 years, down in the legend. If we have light blue, then this technology would come to part of productivity in 2 to 5 years. And if we have white, then we think about technology which will come in plateau productivity in less than 2 years. Here we don't have triangles, but in the year before, we have 2 triangles where they think that some technology will be used in more than 10 years. In 2020, you can see that almost all technologies, solutions in blockchain technology, we have in the first and second phase. It's different than the hype cycle from 2021, where we have approximately 1/3 the phase. Okay. I want to show you that, and when Corona started at the beginning of 2020, many companies start thinking more digitally than earlier. of course, we have digital webinar events. We have webinar digital events, online events, like here, like this event. We have many meetings through the internet. We use more VPN connections to connect to our company, work remotely, and many companies start thinking about some digital currency, about digital solutions, and the use cases of blockchain in this in in in, uh, in these companies. We can find a lot of financial companies like Visa, MasterCard, PayPal, uh, then DPS, and many others. It's just one example. Now we can see some of the problems with current processes in financial sector. Of course, it's not a great problem, but many people think that with blockchain we can improve these processes. Here we have a lot. One of the problem is paperwork. Then we have long chains and payment settlement, money laundering. We don't have a single database for all common companies, institutions with data which they can share. Then we have bank frauds and many others. And then now I can little explain each of these purely. Even when most of the bank processes are digitalized, there is a lot of redundant paperwork that is to be done in front of the client or at the back end. Sometimes it's a regulatory needs, but sometimes it's a fact that the financial institutions place more trust in paper. With blockchain, we have technology which is different than earlier technology because we have functionality and integrity of data. Because data we have immutable data of information of clients or some business information or any others, but we don't have only functionality. In all other technology, you have functionality. Security, like confidentiality or integrity, is not mandatory. But in the blockchain, it's mandatory functionality and integrity. Of course, we can have confidentiality, but it's not mandatory. A typical international trade finance transaction can take as long as 60 to 90 days to complete because of a lengthy and cumbersome paper-heavy processes. Sending money from one country to another isn't as easy and quick as it sounds, or when ideally it should be. It's usually necessary around 3 to 5 days to send the money across. When we talk about money laundering, we can say that tracing money is not always easy and possible, thus leading to black money as a result. And this impacts all the businesses that handle the black money. We don't have a single database, and an example is a KYC process. One example where we can use single database is a KYC process. Every bank does their own KYC, know your customer. It's short for know your customer. Every bank does their own KYC process, dispute a successful know your customer process of the same customer by another bank. Because of that, we have a problem. It's cost money and brings avoidable delays in downstream processes. Of course, we have a bank fraud, and we need to handle with this. And we see frauds in loans, letter of credits, fake currency, and many other areas. Many other areas where forgery is not insignificant. According to the research, banks lose between 50 billion and 20 billion dollars annually from identity fraud alone. It's a lot of money, and with blockchain, uh, some experts think that we can improve it. Of course, I completely understand this technology, and I can see how we can improve some processes, but we need to know that blockchain is not uh, the powerful thing in the world, but we can use blockchain in some of our processes to improve uh, some businesses, maybe some cooperations with the clients or maybe with the regulators, etc. Here you can see uh, uh, some use cases of blockchain in financial institution. Uh, we will talk a little about digital identity verification, cross-border payment, trade finance platforms, and smart contracts. I will explain what smart contracts, and we have an immutable database. We can uh, some use cases in anti-money laundering and in auditing process. We have use cases and it's easier for banks and the regulators. Okay, let's start from digital ID verification. Um, the application of blockchain can enable banks and other financial institutions to identify individuals using blockchain enabling IDs. The customer identify information is secured using blockchain, of course, and banks can increase public trust while protecting against fraud and speeding up the verification process. Mm, uh, Transferring money across boards has traditionally been slow and expensive. Since system typically pass through multiple banks on the way to the payment final destination. When you use for cross-border transactions, a blockchain can make the process faster, more accurate, and less expensive. Um, uh, of course, we need to know the right blockchain solution because now we can see that many blockchain solutions which is used in cross-border payment is are not the public; it's a private blockchain solution. And of course, we can use blockchain like traditional systems. Blockchain can be centralized, private. Blockchain solutions can be decentralized. It's a primary use of blockchain and distributed. Uh, when we talk about smart contracts, we can say that many banks are using blockchain trade finance platforms to create smart contracts between participants, between clients and bank, between maybe two clients. And with this, they're increasing efficiency and transparency and opening up new revenue opportunities. Uh, I'll little explain what is a smart contract. A smart contract is a computer program. It's a code, or it's a transaction protocol, which is intended to automatically execute, control, or document legally relevant events and actions according to the terms of contract or an agreement. The objectives of smart contracts are the reduction of need in trusted intermediators, arbitrations, and enforcement costs, fraud losses, and as well the reduction of malicious and accidental expectations. With smart contract, we have more automatically, less manually work. Of course, when we talk about blockchain, when we talk about smart contract, we need to trust more in solution than earlier. But it's happened because we use more technology and the more automation than manually work and then human work. And human, of course, we in this way we eliminate human mistakes. But okay, we have some other problems, and we need to handle with this. Some other risks. Okay. Blockchain maintains a traceable and auditable history of data, which is immutable. And this eliminates the use of paper and reduces reconciliation requirements. We can use a common shared blockchain network, and multiple banks, financial institutions can become part of the single blockchain network with some information, with some data. Not all, they can't share all data, but they can share some data, like data which is needed for KYC. They can maintain KYC data and help each other, reducing redundancy in the KYC effort. When all parties are part of the same blockchain network, everyone can see data in real time. And also, we have algorithms, and there is a trust in the data store, and conflict resolutions can be easier in a blockchain-based system. We can track money in when we talk about anti-money laundering in blockchain network. All transactions could be traced to their genesis, and the data is guaranteed a tamper-proof source of funds, and the money trails can be established consequently by regulators. Also, source of funds and the money trails can be established by regulators, and it is very important. We have cooperations with banks and regulations, and we have in the year before, but now we can maybe improve these cooperations and make easier auditors, make easier for internal, external auditors or bank regulators to track these activities, to check these activities, and audit all of these processes, of course. I want to say a little more about the GDPR and blockchain, because many people think that the GDPR and blockchain is completely two different things. I don't agree with this, because we have regulations, we have technologies. We need to make this technology compatible with regulators. Or sometimes we can change a little of regulators, but we need to save the principle of every regulators. I think that the blockchain and GDPR are two sides of the same coin. And here we can talk about some similarities and differences between blockchain and GDPR. Of course, we know that GDPR is a General Data Protection Regulation that is recently adopted by European Union, and it's mandatory for all companies who works in European Union, who works without European Union but cooperated with companies in European Union, and for companies which have and save the data of their clients, private data, their clients of individuals, of individuals, not legal clients, of individuals, physical clients. Because of that, we can talk about some similarities between blockchain and GDPR. In both GDPR and blockchain, we have data transparency. Both GDPR and blockchain are leaning towards individual rights. And GDPR and blockchain networks aims to provide more secure regarding personal data. Of course, the situation is not ideal. We have some differences, because in blockchain we have immutable data, and we can change data in history. This has some advantages, but when you talk about GDPR, this is not advantages, because sometimes we need to change this data, because in GDPR gives users the right to erase, add, or delete their existing information. GDPR is created for traditional centralized systems, and because of that, is more suited for centralized systems than blockchain. But I think that is not a problem because now we have centralized systems. If we sometimes have some or maybe all decentralization, then we create regulations uh, in line with this. Uh, and the GDPR requires user identity, but blockchain can work in anonymous and can be uh, blockchain deals with the anonymity, but we can create different blockchains. We said about that we can use maybe private blockchains, which where we have immutable data, integrity of data, functionality, but we know who use this um, uh, blockchain and who creates some transactions in this blockchain. We can connect it this information if it's necessary because blockchain is just a database. We can create database in a on a way. We can put in database information which we want. Sometimes it can be um, anonymity and data with anonymity, but sometimes we can or transparency in this data. It depends of us and our use cases. Uh, and for the end, I want to say a little about scalability of the cryptocurrency. There are some limitations of the blockchain technology at the moment when we talk about uh, TPS or transactions per second. Uh, this is the biggest of all limitations, but solutions for blockchain have some lag significantly behind traditional payment process like Visa, MasterCard, PayPal, etc. And it is important to understand that currently the TPS capability of blockchain network is universally related to the level of decentralization in the network, which means that bigger and validating mining network, lower will the throughput of the net. And on the other hand, we have private blockchain networks with a limited number of parties in the network. Private blockchain network, which are using Kuiper Fabric or R3 Corda platforms, as their blockchain platforms can have a significantly more TPIS than a public network like Bitcoin, Ethereum, with huge decentralized user base. Private blockchain network can leave maybe 500, 1, 2, or 3,000 TPS based on the configuration of the network. In the last time, we can see that we have some new blockchain solutions, uh, uh, and their owner said that they can create uh, some thousands, 100,000 transactions per second. But okay, we need to see it. Blockchain network like EOS, Ripple, Neo, etc. have a higher TPS capability because their validation or mining process is um, confined to similar number of nodes in the network. This process is designed makes private blockchain a less decentralized blockchain network. Yes, many people think that it's a problem because base blockchain is decentralized network. But I want to say that we can use this technology how we want, and we need to find we need to find the best use case for us or for us our company. There are new ideas and development in the area of improvement TCPS capability of public blockchain networks, and I think implementations and applications of these ideas could be seen in the coming period, in coming years. Thank you. That's all from me about blockchain and these topics today.
Hi, Luca. Thank you so much for your perceptive presentation and for participating so
You're welcome.
effectively. And it was really very interesting topic about the blockchain and how is it helping. It is helping in the banking sector. So thank you so much for your valuable insights. And I'll ask the audience that if someone is having any question, they can ask in the chat or in the QA session. And our presenters are here to answer all of our queries. Thank you so much, Luka.
Thank you. Bye.
Bye. Have a great day.